Welcome to this live session hosted by FAB, your insurance broker and moving to France expert. FAB is like your immigration GP. We're here to answer all your questions: visas, residency, healthcare, driving, taxes, properties, and much more. We navigate the complexities of France to help you embrace the French lifestyle you've always imagined. Although we are experts in the immigration industry and have been working in this space since 2015, none of what we say should be considered legal or financial advice. It is also worth noting that the immigration industry is an ever-evolving field, so things that are relevant today might be outdated or inaccurate when you actually move to France. FAB's main source of revenue is insurance through our brand, Fab French Insurance. Our main goal is to ultimately help you move to France, as we only sell insurance to clients applying for a visa, a residency permit, or those with a French address. During this session, you can ask any questions you want. However, we will not answer long questions to keep the pace fast. We also won't be able to address questions related to personal or very specific issues, but rest assured, we can get in touch after this session to either advise or refer you to one of our trusted partners. And now it's time to get this event started. Thank you for joining us today. We hope you find our answers valuable. Our greatest reward would be to be a part of your journey to moving to France. And hopefully, it starts with this session today. We will pause briefly to allow all registrants to join. The session will begin shortly.
Hello, everyone. Welcome back. Oh, actually, welcome. So this is morning in France today. Hopefully, everyone has had a cup of coffee already. So today, I'm with Rebecca in the background, who will be answering your questions in the Q&A if we can't address them. And I'm also joined by Eric and Peter. Eric and Peter, if you can turn your cameras back on, please, so that everyone can see you. Hello, Eric. Hello again, Peter.
Hello, good day, everyone.
Hello, everybody.
So today is a session dedicated to you, the Australian guys, moving to France, so wanting to buy a second home in France. And we'll be addressing topics such as visas, residency, and financial considerations. So I think we'll start with the quick introductions. Maybe Peter, you can tell us who you are and what you do.
Hello, everybody. Yeah, my name is Peter Wakelin. I'm a partner with Blevins Franks, a specialist advisory company for people moving into France or already here. I've been here since 2007, so familiar with lots of things that everybody will have to deal with. And I'm situated and based at the office here in Southwest Ontario, Southwest France, in Bergerac.
Great place. So fantastic place, Eric. Peter, sorry. Eric, now, maybe you can tell us who you are and what you do.
Yeah, good morning, everyone. My name is Eric Donjon. I'm a French national. I've been living in the UK for the past 40 years. I'm the French honorary consul for the north of England. And I'm talking to you today as the director of the European Concierge, specialist in visas, carte de séjour, and other French admin support.
Yeah, all the sexy stuff. We'll make it sexy for you today. So thank you, Eric. Okay, so we got a few questions before this session, and we'll run through them. Feel free to ask any questions you have. We will start with visas, and then we'll speak about residency, and we'll head up with these financial considerations. So, well, on to you, Eric. The first questions were about visa, and so questions we've been asked a lot, like, can we purchase a property without being a resident in France? And is it best to already have a property in France when applying for a visa or residency?
Okay, so anybody can buy a residency in France, be it a small 2-bedroom lock up and go or a big castle. You don't have to be a resident for that. You'll be limited in the number of days you are staying in France to visit your property. You might need a visa to visit your property, so it's always advisable to talk to us about it beforehand. And unfortunately, the fact that you have spent all that money on a French property will not bring you any bonus point when you apply for the visa. The only items that need to be secured is a suitable financial support, self-supporting funds, and full medical support. After that,
yeah, all the 3 pillars we mentioned very often. You need for a visa in France, a long term, you need an address, you need proof of income, as they call it, could be proof of savings, and proof of medical coverage. The benefit of having the property would be securing that first pillar. Yeah. So actually, as we're talking about this, maybe you can tell us a bit more about, like, you know, what are the visa requirements, or like how to be eligible, I could say, for a long-term visa when coming from Australia.
Okay, so if you are either coming for the minimum visa given by the French state is 6 months. And obviously the longest is 12 months plus, because you are asking for residency on French soil. In both instances, you need to show funds equals to the French minimum wage, which is 1,400 euros per month times 12. Even if you are coming here to work, the French state sees you as a potential weight on the French system, so they will want you, and don't take this badly, they will want any newcomer to be able to support themselves financially with 1,400 euros times 12 for the full year to qualify for the visa. So if you're a couple, it's 1,400 times 2 times 12. The children, if you come as a family, will obviously carry a lesser amount of euros, but it's basically what the minimum financial requirement will be. More is obviously up to you, but that is the minimum requirement for year 1.
Is it what you have seen in real life? Like, don't they have a bit of a tolerance? Like, if they don't meet the requirements exactly as a couple, they have a bit under that. But like, if there's no mortgage or stuff like that,
it is a strange calculation that is basically only known to those who put it in the system. I advise my client to have 1,400 euros per month for each adult, and everything will go smoothly.
or the equivalent times 12 in savings. Yeah,
That
okay.
is correct. Yes,
It's
yeah, or pension, or a mixture of pension and savings.
Oh, okay, good. Okay, nice. So that's the second pillar, about the income as well. It covered it. And what about the third pillar then, the medical coverage? Do they need like travel insurance?
The medical cover for Australian nationals, 6-month visa or 12-month visa, plus you still need full medical cover, which is visa approved. Here, we're not talking about a travel insurance. That is very, very important to make the difference. Travel insurance can insure you for everything you have on earth, but it is not very often visa approved. So I must say Fabien and his team are a broker and will be able to tailor their medical cover to suit your own situations. But be careful, travel insurance is not approved for visa approval.
Yeah, we've seen that quite often. Some I wouldn't say visa being rejected, because like the point blank rejection coming from Australia is not often a thing, or like, if ever. But sometimes then they ask them to fix the application or amend it because the insurance bit was not compliant. So yeah, because they've used travel insurance and stuff like this. So yeah. Okay. Okay, but basically the visa, from your experience, I mean, how often do you see visa being rejected when if they meet the 3 pillars, how would you say the odds are for a visa to be accepted from Australia?
Well, the odds, the only flaw that clients or people come across with is that 20% of each application is rejected because of the lack of good and correct documentation.
That's the supporting. But if they meet the pillar and if they're currently
If they meet
documented,
those three points, and obviously follow professional guidance, the visa is 100% assured.
yeah, that's that was my gut feeling, but yeah, okay. And same for us. I mean, we're seeing through insurance something like 1,200 visa applications each year, and we very rarely see because we offer 100% money back guarantee. So basically, we don't have to trigger that clause very often. We do once in a while, but it's very occasional. So yeah. Okay, and so, but the visa is basically just the first step, like into a relocation process, and then they may want to consider residency application, which I think we call the carte de séjour in France. Well, maybe you can talk us through what happens during that first year in France and how eventually they may apply for that residency permit.
Okay, so once the initial visa requirement has been done in Australia, so appointments with the French consulate in a couple of towns in Australia, you have, or you happen to have your sticker in your passport and you move to France. You have 3 months to register that visa on arrival in France. Then at the end of the 3 months, you are eligible to join the French health system and be part. Obviously, you need your 12-month medical cover. It's a bit odd to talk or to mention that. You need your 12-month medical cover to get the visa, but at month number 3.5, you can join the French health system. But
you can start the application. Yeah, they don't join it yet.
That is exactly, that was the but. You have sent your application, but you don't hear back from them until about month 11, in which time you need to be covered. So this is why the 12-month full medical cover is needed, even if you apply to the French health system in month number 3, 4.
Okay, it's good.
When we do that, we also do your application for social security numbers, because you'll be joining the French social security system, even if you don't work here, if you come here as a retiree. And in month number 9, it's time to think about your year 2 residency, which we called carte de séjour. It's a residency card. And back to the same facts or the same requirements as the first year, in the first year visa, you need to show sufficient finances to support you for year 2. If you haven't heard yet from the French National Health System, you will need to look at a second-year private medical cover, but Fabien will be able to mention more about it. And the application is an online application. If you meet the financial requirements and the health protection requirement, either because you have heard back from the French health system and you are in the system, or you have a year 2 private medical cover, you are assured of your year 2 residency. That goes up for the first 5 years. After 5 years, you can either choose to stay as a retiree, an Australian passport holder in France, and then apply for a 5-year card. So it's 5 years every year, and then 5-year card. Or after 5 years, if your French is good enough, you need to sit a proper test, professionally observed, and you can apply for French citizenship.
But is French citizenship application like mandatory to stay longer, or can they just stay with residency permits if they want?
Not at all. You can stay as an Australian citizen all the rest of your life in France. You don't have to apply for French citizenship. Applying for French citizenship gives you slight advantages, such as being able to vote in elections, and giving you also freedom of
the right to protest. Would you have the right to protest then?
You will have the right to burn the tires in the street. Absolutely, yes.
Good. Well, that's a nice perk. Okay.
No, everything is absolutely fine and very quiet. What you see on television is to make television.
Oh, but for Australian audience, I mean, do citizenship might change the requirements in terms of wine intake compared to a beer intake, for example? Like, That might be
could a
problematic.
deciding factor. Absolutely, yes. Yes. There is
No,
also
we're kidding,
something-
guys. We're kidding.
There is something to check that sometimes countries do not allow to have dual citizenship. So we need to check if Australian government allows you to have another passport of, for example, European citizen, such as.
But France doesn't have a problem with that. Yeah.
So
Okay.
Australia might, I don't know, that is something too easy.
We've had a question. An Australian who also has an Irish passport, and I say, like, do I have to stay in France for 3 months to get residency or tax residency? So I think tax residency will keep that bit for financial considerations. Like residency, basically as an EU citizen through the Irish passport, what will be the process then?
The process is very simple. If you come alone as an Irish citizen, so therefore on an Irish passport, you can come and go, stay in France as little as you want. If you're coming with a wife or husband, the French government is asking you to apply for a visa for the first year, and then the arrangements will be done within France for the husband or wife to become officially the partner of the EU citizen, Irish citizen in that case, and be able to start working as soon as you arrive in France. There is a wizard that proves that, a France visa application wizard that basically states that any EU passport holder coming with a other citizen passport will need to apply for a visa.
Peter, maybe you can comment on the tax implication. I mean, does it change anything if you're EU citizen, and when basically do you become a French tax citizen?
Well, from a taxation perspective, the rules are all governed by the double tax treaties. But in theory, if somebody's looking at wanting to arrive with the intent of them staying on a permanent basis, their date of arrival becomes their formal start point for tax residency. And therefore, from that date onwards, your sources of global income are subject to the French tax rules. Your sources of assets are subject to the tax rules, but also importantly, becoming subject to the French inheritance, both rules and tax liabilities going forward from that date.
Okay.
Without that unknown, perhaps, as you say, coming as an initial visitor with an unsure of whether they know or not become permanently resident, the key again comes back to the double tax treaty rules, which effectively says in simple terms, if you spend more time in that particular country than any other in any one given year, that country would have the right to deem you to be deemed resident for tax purposes.
Okay, good. And we'll dig a bit deeper on this. But basically that tax treaty also kind of guaranteed that they would never kind of pay twice or in both countries. Is that?
No, that's right. The double tax treaties are fairly common around. Most countries have them, and it ensures one of two things. First and foremost, who has the right of a country to say that you are deemed to be paying tax on that source in this country where you're resident, but importantly also making sure the liability is not taxed twice. Very true. Yeah.
Okay.
It's a really important key document. Okay,
that's good. That's good. Thanks, Peter. Thanks for the enlightenment. Okay. Well, another question that might be relevant for you, Eric, said, I'm a UK and Australian passport holder. Can I stay longer with one or another?
No, you are limited. The UK, since the unfortunate Brexit, is considered like a third-party country, and therefore you cannot, one doesn't give you an advantage over the other.
Yeah. Okay. And we would buy a second home in France and go there for 3 to 6 months a year. Is that possible?
Yes, but with a visa.
Yeah. Okay, good. Yeah, if you want to exceed 90 days every 180 days, which is the rule in the Schengen area, is the 180 days rules, then you need a visa. Yeah. Okay. Okay. So also something about driver licenses, because like one who would want to permanently relocate from Australia, do they need to, they'll have Australian driver licenses, and do they need to exchange the driver licenses? And if so, how hard is it with Australian license?
Okay, Australian driver's licenses are exchangeable for a French one, but it's not as easy as an American one, for example. An Australian driver's license can be exchanged on arrival for an A2 type driver's license,
So motorbikes
which is a beginner's.
or beginners.
For
Okay.
beginners, and for 2 years they will need to drive on an A2 and then have a test, a live test. But you are absolutely right. A is the drive.
But it's not
is the
as difficult
motorcycle.
as the full blown up
No,
test.
absolutely not. No. You can exchange, and I think the B driver's license is the car driver's license, and this one can be exchanged.
Okay.
Without anything else than a few translations and.
Oh, that's for
paying what you
motorbikes
pay.
owner. Okay, yeah.
That is
Okay, great. Okay, this one we've answered. Oh yeah, a question that I've seen often, like as as French residents, or someone who would have moved from Australia to France. So as resident, is it possible to earn an income? And for example, this couple was saying, well, we own a shop in Australia and would like to do the same in France when moving there. Is it possible, and more broadly, like to do things like remote working or being under a French employment contract, having a gîte or any kind of business?
Okay, so on the basis of an Australian passport, you cannot arrive in France and just be employed by a French company. You can, however, apply in Australians for a visa allowing you to have a gîte, a shop, any kind of self-employed status. And that is something that is being done during the visa process. So there's an application to be done with the French government that allows you to obviously show what you intend to do. Once you've got the approval of the French government to carry out that type of business, you then go and we apply for your French visa in Australia, which will give you a visa allowing you to work as a self-employed person for gîte, for builders, for shopkeepers, and so forth.
Okay. Remote working is a bit particular, isn't it? It's
remote working doesn't have a specific visa as such that we can apply for a visa to work as a remote worker, which would give you a visa as a profession libérale, or you can apply as a retiree non-working visa, which will also allow you to work from your French home as long as you don't work with French or EU citizens or companies. So if you want to burn the midnight light in France, working with Australian companies from the corner of your kitchen table, it's very astonishingly doable without,
it's good.
Without the visa.
That might need a couple of glasses of wine, but okay, it's good. Okay, it's fantastic. Actually, we have a question which I think is more for Peter. Eric's asking, is currently on the superannuation pension, which is taxed by the Australian government. In the event we move to France now, does the French government then tax me again?
But the answer to the question on it is the fact that it will become liable for declaration and taxable in France. When you leave Australia, it no longer becomes part of your tax liability in Australia. There is, in general terms, again, these are all governed by rules of the double tax treaty, but the only pensions that will ever remain liable for tax in Australia would be something like an Australian government deemed occupation scheme, so a military or police or something similar. Those would always remain liable for tax in Australia. Virtually everything else becomes liable for declaration and taxable in France.
Okay. And also something I like to highlight, whatever happens, if you've paid, declared, because you've declared probably something wrong, if you've paid taxes in a country where you shouldn't have been paying, then that's also part of the dual taxation treaty. Then you would be eligible for a tax credit or something in the country where you shouldn't have.
Yeah, generally either one or the other. Normally a tax refund, because by definition, if it's a French liability that you need to be paying, you need to be then reclaiming a tax refund from the tax that was applied in Australia in error, so to speak. And that's basically the rules. It's simple. It is a process, and unfortunately, it's a process that will take a while to wash itself through the system when you first arrive, dealing with both the Australian one and also the French tax systems at that point during your first period of arrival.
Well, that's also why it's highly or like even super strongly advisable to be speaking with an expert when relocating to make sure you make the best out of the move and don't make some of the mistakes. Again, eventually they'll be okay, but like avoiding paying twice.
Definitely. And when we're dealing with people who are in places such as Australia, we always like to suggest that they start from a financial planning perspective a good 12 months ahead of the move, because there is often quite a lot of things to be done before you make the move, as you arrive, and it's to ensure that nothing gets missed and ensuring that over the longer term that you make maximum tax efficiencies of doing everything in the right order.
Okay, great advice. Actually, another questions, we'll get to the questions. Another questions we've had: what happens to our Australian pension should we reside overseas? Like, is it taxed by the government where you reside? So, like, I think we've answered this one.
No, it's just the same as what we just mentioned. And generally speaking, yes, it's taxable where you are tax resident of, with the one exception, as we said, a government occupational scheme is the only one that remains liable in the country where it's issued from. What is also important to add to that, though, is even though if it might stay liable for tax in Australia, you still also have to declare it on a French tax return, because it works out your fiscal reference point for total sources of income. But it then benefits a tax credit because it remains liable for tax in Australia in that instance, though.
Okay. This question that I remember we've discussed it before the event. Like, it's going to be a bit of an odd answer, but can our superior annuation be used towards purchasing a property in France?
In simple terms, the answer is no, and that's because an Australian super fund is what they call a protected asset, and as such, therefore, it can't be used as a security towards a loan. And therefore, actually, it can't be used as security in arranging a mortgage or towards a property purchase in France.
The French mortgage,
yeah. Now, the key however is, whilst it might not be able to be used as a security, you know, there is the position that you might be looking at, and you would probably need the advice of your Australian advisor here in this instance, is what value of the fund is potentially available to withdraw in an efficient way. For some people, that can be quite a large value, and it's often a beneficial thing to consider, because if it's just drawn as future pension income, it's subject to the French tax law. If you move it out and then utilize some of it efficiently from Australia before you move, you can utilize it towards the purchase of a property, for example, or as if it's not used for that, restructured into a tax efficient wrapper for French residency going forward, which can provide personal significant tax advantages compared to a pension, but also the benefit of significantly helping what is another key driver in terms of things to consider, and that's about French estate planning.
Okay. Okay, we get quite a few questions, so I think I'll try to answer them. There were one. The problem with the tax implications is the different tax years in Australia and France. I think, Peter, that's basically what you're saying. Like, yeah, and you look at the problem, but it's not.
Yeah, that's a fairly simple one to resolve, and it is because they will both use what they call split tax years. So the date of arrival going forward is when you become liable for tax in France for that year. So, for example, if it was today, the 23rd of July, your liability is from the 23rd of July to the end of December, which is the French tax year for your first tax return. Anything that was prior to that, and it's not much because of the timings of the Australian tax year being end of July and June, you still then have the liability. One, a final return in Australia covering the part year, and your first return in France is only a part year, and thereafterwards it becomes regulated on an annual basis thereafterwards.
Okay, great. We have one, I think, for another question for Eric. I'm currently working in Switzerland and have my visa for here, so a Swiss visa. I have a property in France and would like to transition to live in France. How do I apply for a visa when I already have the Swiss one? I tried to obtain the long-term visa non-working, but it was not possible due to my situation.
You just apply as an Australian citizen living in Switzerland to the French authorities to live, asking them to live in France, or a visa to live in France.
And if the situation, because it might, I mean, maybe it's been rejected because of your specifics, so reach out to Eric. We'll send the details after this session, maybe tonight or tomorrow, but so you'll have the details, Peter's details, Eric's details, so you can ask them questions directly. Also, something we didn't mention, which is very relevant in that particular case, but also more broadly, you can apply for a visa, obviously in your country of nationality or any of your countries of nationality, except if that's French, but then that's France, but then you wouldn't need a visa, or a country of residency. Because if you have residency, let's say in Italy, then you can apply for a visa from Italy. You don't have to go back to Australia, considering you have legal residency, obviously, in that country. Okay. Eric had another, not you, like another Eric in the audience had a question for Peter. Thanks, Peter. So we advise the Australian government that we are no longer residents of Australia when making the move. Like, do you really need to, Peter, do you really need to inform the Australian authorities, or is it like when you file the tax returns that basically you're informing them?
No, it would generally be recommended because it makes it clear in terms of the intent of you becoming a non-resident for Australia for tax purposes on a specific date. And it then brings around all sorts of other potential implications. For example, and again, another question that we've been asked again historically is if at the time of making the move, I'm not in receipt of my Australian state pension, do I need to do anything? And the answer to the question again is yes, because you need to physically apply for it. And that's then again making sure that the Australian authorities are being made aware of your intent to leave. So it's another one part of that would be really important to, one, apply for it, even if you're not entitled to it. There's a combination of things of making sure that your personal superannuation account is linked to the MyGov account in Australia. And then the Australian authorities then work a calculation to tell you how much your future Australian state pension will be worth when it becomes available to you. But again, lots of things to be done pre and post moving.
Oh, actually, it's great because we have the question, which was next on my list, and one of the attendees actually asked it. As I won't qualify for my Australian pension for another few years, and know that this cannot be claimed here in France due to there being no agreement in place, should I leave my super in Australia and use that as pension and thereby be taxed less?
But there's a number of points brought there, and there's a combination of potential answers. So the first one, as we've indicated, is already that you need to be informing your provider of your fund the knowledge that you will be becoming non-resident. Is then leaving it there, and if it was then just established at a later date, it becomes declarable in France as a pension income and taxable in France in marginal tax rates. The question that you need to get advice on, perhaps with an Australian advisor, and that's the right person to be dealing with it with you in Australia for the is the possibility of what may or may not be available as a lump sum withdrawal from it, and then doing something else with that fund when you arrive that will be then, as we talked about earlier, much more tax efficient than generally pension income will be.
Okay.
A combination of things. Yeah.
Okay. Because I think actually what scheme does France have? Well, another question, but I think what scheme does France have for high net worth individuals getting residence? So I think it's more for Eric. It's probably in terms of visas. I think France doesn't really have a golden visa, although we do have some sort of an investor visa, like for 300,000 euros or more, but very often, so it really depends what you want to do, but this is an option. But very often, Eric, I think you'd agree with that, like the visit, like the non-working or like the business visa road is so much more simple that most people, even high net worth, would just go for that. Although this is an option, I mean, it needs to be considered based on your specific, but usually like that investor type of visa, it's mostly for like startup builders or like, you know, entrepreneurs who really want to build something. But like high net worths would just go for the regular road visa because it's so much more convenient and simple.
That is correct. Yes, the application, it's much easier if you want to be a simple visitor than if you want to become what you think is called a golden visa. Restrictions are being applied on what we could call a golden visa, with high import of cash, some escrow money being put aside. And unless you want to create a local nuclear power station and build it yourself with your team of Australian builders, you might as well apply for a standard visitor's visa from Australia and don't have the worry of having to show your cash, do some escrows, and employ some pretty high-powered solicitors anyway to put that in place.
An interesting question, because this one I love. Like someone's asking, you know, can you tell us about the marginal taxes in France, normal rates for normal working income in Australia? I think we are at 48% after 150K. This is actually very interesting because France indeed has a very bad reputation when it comes to taxes. And well, I'll be honest, guys, yes, in terms of social charges and taxes on wages, yes, France has gone a bit crazy. And so it's hard to be making an important wage without your employer also paying important taxes. But when it comes to expats, retirees, or people with pensions or savings from abroad, then just the national taxes, I would say, are fairly standard and acceptable in France. I don't know if you know the rates, Peter. I do, but if you want to get this one.
Yeah, okay. No problem. As I say, France, there's a couple of things to remember as well also, but for example, a couple arriving in France, you only file a single household tax return rather than individual. And that in itself can help because you then multiply all the band allowances on sources of income that become declarable. And there are 5 bands in France. And the first is a zero rate band, which is round figures, because they are all strange and awkward figures, but approximately 23,000 euros equivalent a year is zero rated. It then moves from there to just over 50,000, the difference between the two at 11%. Above that, 50,000, again, slightly above that, but it's a round figure again. It then moves from 11% to 30%, and so on, up the band scales. So in real terms, you can actually probably, if you just looked at income tax in isolation, it's probably lower as a household couple than it is in Australia. It's the key message, as Fabien has mentioned, is about then social charges that may or may not be applicable on certain sources of income, investment returns being subject to a flat rate. So it's a case of looking at the whole picture and then adopting a strategy in order to minimize your liability by doing perhaps certain actions to shelter investment returns, for example. And that will all help keep your overall tax liability to a minimum on moving and becoming French resident.
Oh yeah, and that bit was very important actually, because even if like you were saying, it's roughly, I think it's like 350,000 euros as a couple combined when you reach the maximum tax rate in France, which is 45%. But it also depends on the source of income. Like if you have dividends, for example, there won't be, I mean, even if you have like €1 million dividends a year, you won't be taxed at this rate, because as you were saying, this would be a flat rate. And that would be 30%. More like 30%. Yeah.
And the key is there are solutions to help shelter it by holding these assets that are providing investment returns into appropriate tax efficient structures for French residency to help keep that tax liability within. So it's about looking at the overall planning and advice in terms of before you move, as you arrive, to look at all these options available to ensure that you utilize the solutions to help keep your liabilities to a minimum.
And we didn't even mention this, which I think that, and then you'd be the expert for this. Like all we've been talking about up until now was like, basically they get all their assets and money still in Australia and get this money stream or dividends or whatever to France. But very often it's inefficient, and they could actually move at least some of that money into France, into French tax efficient schemes. And then the taxation rates, and well, in a way, would plummet. I mean, not directly, but because the schemes would be so efficient, like the assurance vie, that's what I have in mind, for example, then they would feel like they're no longer paying taxes at all.
Yeah, and I have lots of clients who have done that and have very, very reasonable, significant levels of income through the assurance fee because of the nature of it, and that actually pay very little tax at all because of the way it's been structured. What's also really important, and again, just as a side one linked to it, touched on earlier, anything that you actually have as assets that, for example, in shares or dividends, be they in Australia or anywhere else, form part of your estate. And that's a really key addition for looking at because of the French inheritance rules and also the tax liability that is completely different to Australia. And as a consequence, it's your eventual heirs that end up paying the tax bill. So solutions to help do that can also be applied by structuring the financial assets into such things as assurance fee, because it provides personal tax efficiency, but also some significant mitigation benefits for inheritance and estate planning as a future French tax resident.
Oh yeah, and actually, it's about, someone's asking, is assurance dans vie? Sorry guys, this is very confusing. Life insurance, assurance vie in France is an investment product. It's not life insurance. I mean, this is France. It has to be confusing, otherwise that's not funny. But so the guy was asking, is that like a private pension, Peter?
Well, certain people do utilize it as that for that, but an assurance fee, where the name comes from is because it's written under tax rules of life assurance contracts. It is effectively, however, an investment bond providing linked to the French tax system, providing you personal tax advantages, and also then helping mitigate French inheritance rules and taxes on your heirs.
Okay. Actually, another question for Eric, so that we're switching from one speaker to another, which is asked by your homonym Eric. Eric, another Eric is asking, my partner and I are not married. We have been in a long-term relationship for almost 20 years. Our main assets are joint here in Australia. Is a de facto partnership recognized in France when it comes to applying for residency or a visa?
Yes, it is. And you, obviously, there are ways of showing that you have been together for X number of years. You might have bills in common. You might have the purchase of a house in common. France Limited will just want to see proof of you having lived together for a length of time.
Okay. And actually, but that might be, maybe you don't know, but like the length of time, basically the French authorities are looking for, like, is this kind of a fake wedding or fake partnership? Like, if it's too recent?
2 years to avoid what we call gray marriages and white marriages. So obviously, various differences here. But a partner or partners, Austrian partners who have been together for more than 2 years can be considered like married to the eyes of the French people.
What is an extra add-on, and in that sense, though, is more on a tax issue as well here in France. Because if a couple don't have a formalized relationship and something was to happen to one of them and want to pass assets to the survivor, then they, under French inheritance rules, would have a 60% tax liability because there's no formal relationship. So there is some benefit to also consider why it might be appropriate to look at formalizing it just to protect against French inheritance laws and rules and taxes for the survivor of you.
And that's a formality. And even if you married or taxed, by the way, this is like a pro tip, I would say. Even if you married or have a civil partnership in Australia, when you move to France, don't forget to kind of do that as well in France, because then you're not married in France. You don't have a civil partnership in France. So as Peter was saying, to make sure that whatever happens, the partner will be protected and everything will be as married or partners. then make sure you also go to your local mairie, which is a city hall, and get this also acknowledged by the French government and authorities. This is very important.
If I may add very quickly, Fabien, for those who aren't married, if you're married, it's absolutely fine. You get your marriage recognized, and that's absolutely fine. For those who aren't and who are living together without having been married, we can, once you arrive in France with your visa, and for the tax purpose that Peter has just mentioned, we can apply to have your French civil partnership recognized. There's a lot of documentation again, a lot of translation to be given, but it's a process that can be done in about three months.
Yeah, and the process in itself is a formality. Well, I've done it myself. I'm not married. I live in Spain, sorry. But also it's called the PAX in France, and so as Eric was saying, this is indeed a lot of paperwork. But then once it's all dealt with, you just go to the mairie, you sign a document each. Now you go together, you sign a document, and that's it. You're officially your partner. So that's very simple. So well, again, this is France. There's a lot of paperwork, but apart from this, it's fairly simple. We'll get to these last questions, I think. So I'll read them both. I think they're for Peter. They're connected. How does French inheritance tax work for property held in France and or Australia? And subsequent question: what is the inheritance tax like if I die? What happens to my house?
Okay. Now, the fact that the property, let's start with that one, nice and simple. So whether you are resident or non-resident to France, the French property will come under the French rules, both for the rules and also for the tax liability on whom you might want to bequeath it. So the key point with regards to the rules is the fact that if you have children, any of you, they are deemed to be protected heirs and ordinarily would inherit above the surviving spouse. And that might not be what you want to achieve, but there are solutions to that. But ultimately then, if it's that's solved and the property then eventually gets bequeathed on death to whom you want it to go to, the tax liability is payable by the beneficiary. And the tax liability that becomes payable is effectively determined by your relationship to the heir. So what I make it simple, and I do it at two extremes. So if it's going to your own children, they can benefit the first 100,000 euros without liability to inheritance tax. Any amounts on that, then it becomes taxable in band rates. In the worst case scenario, if it was being bequeathed to a non-blood relative, and that includes stepchildren, so that's a real key important one there, they can only receive a free of liability for inheritance tax benefit of just short of 1,600 euros. And with amounts in excess, they have to pay 60% on. And the key point, it's they, the beneficiaries, that have to pay the tax. So there is some need to look at that as parts of even potentially, how you look to buy your future pension or your future property. Do you need to protect the spouse? How you structure the ownership of it? That is part of early planning. Looking at your assets for financial, it's all important to look at all these areas and look at the whole picture rather than just looking at individual sections about tax efficiency personally, inheritance planning. No, they all need to be put together as parts of the jigsaw in order to make the maximum efficiency, because there will be more regularly several solutions that need to be applied to get maximum benefit.
Okay. It's very interesting. Yeah, I mean, and also there's a kind of a joke I like to make. Don't forget that the wealthiest man on the planet, Bernard Arnault, is French, lives in Paris. So as Peter was saying, it's all about planning, and he has a lot of children, by the way. So it's all about planning. There are ways to do whatever you want to be doing, but you need to do, like, an Australian will would not be recognized in France, for example, and stuff like this. So if you anticipate, that's probably going to be okay, and you might not have, probably won't have to be paying these hefty 60% inheritance taxes. But if you don't do anything, basically, I think that's what Peter is emphasizing. It's like, well, yes, they may be hit like very hard. So it's all about planning.
Yeah, and that's the key, because inadvertently you could just be making the French Treasury your main beneficiary without doing the right planning.
Yeah, Exactly. A very quick question, which I forgot a bit earlier on. Like, what is the situation when you are receiving a military pension that can only be paid into an Australian bank account? It's basically a problem of currency transfer. Because, I mean, that doesn't, where the money is. And because we didn't even mention this, by the way, when we mentioned about all these requirements and stuff in euros, well, they can be actually in Australian dollars. That's not a problem. Then you just have to consider the currency exchange rate. But that's just about it.
Yeah, it's still declarable no matter where it's being paid to you as a French resident, an Australian account, anywhere else in the world, it's still declarable in France.
That's
It's
it.
then your personal thing about, as say, Fabien was talking about, is about how you move it and want to convert it to euros at any point. Your using currency dealers probably is the most appropriate route.
Yeah, same goes for the visa, Fabien. If you actually, we mentioned 1,400 euros a month times 12. You don't have to have euros in on your bank account. You can have Australian dollars to the equivalence of what the amount we just talked about.
And then it's just in this case, like saying the pro tip would be to leave like a bit of a buffer, because then as it's not in euros and the requirements would be in a fixed, like as a fixed requirement, obviously, like if the current, like the currency rate changes and it changes a bit too much, then you may have met the requirement when the money was there and you no longer meet it when at the day of the appointment. So just consider this. But apart from that kind of consideration, you'll be okay.
Valid comment.
Okay, one last question. If you are renovating your house, do you have to notify the building insurer? And two, how do you get contractors to respond to you and do the work? Is it rude to keep on calling, emailing them? Okay, so that one I can answer is about insurance. So, well, first, it depends on the kind of work. When it's not structural, when you're not changing basically the plan or the layout of the building, you don't need to declare anything. It's like interior renovations, that's okay. When you are changing either what they call the destination of a room, for example, it was a garage, it's going to be an habitable space, then yes, you need to inform the insurer, because French insurance companies, we consider the use of each room. Like we don't consider really the surface of a building, we consider how many main rooms, okay? So that's important. And also for something called the PLU, like we have a national, like it's based on the city, it's on a city, basis. Like each city has its own PLU, which is the local rules for what's allowed and what's not allowed. So maybe you also need to be filing some declarations to the local mairie, and maybe even like a permis de construire, like you may require an authorization to do the kind of job. So if it gets to those, yes, you probably should mention this to the insurance company. To be on the safe side, the rule of thumb would be, whatever you're doing, just inform the insurance company. Worst case scenario, it's irrelevant, but at least you're on the safe side. Like building a swimming pool, for example, is something you should tell them about, because you need to be insured for at least public liability in case, anything happens to one of your guests or whatever. And the second bit of the question, sorry, or the question has been dismissed. Yeah, about contractors. Well, this is a big problem. I think Peter might have experienced it in Bergerac as well. I mean, finding a contractor, it depends on what you're looking for. But I wouldn't say we have a labor shortage, but it's a bit difficult to find contractors in France, mostly because, unlike many countries, France has very strict rules in regard to builders. Like they need to have 10 years insurance. And if they want to, like an electrician, if that guy wants to do plumbing, then he needs to have the authorization from the Chambre de Métier, and also the 10 years insurance that goes with that. So because of these regulations, well, the good news is they're probably skilled when you hire a worker-ish. But the bad news is, as this is complex, to get the accreditations for each and every single line of work that they want to be doing, then you have kind of a labor shortage. So if you insist, I wouldn't say it's rude. It's just that they'll probably end up, screening your call or filtering your emails. So yes, they're like rock stars, these builders in France. It's a bit difficult to get a hold on them. There are actually companies, English-speaking people who can help manage those guys, but obviously they'll do that for a fee. But I mean, feel free to reach out to me after this session. I can share some details. So we can help with that indirectly. But yeah, that might be a problem. Maybe, Peter, you've experienced this personally as well.
Yeah, and I think it's very commonplace in France. I think, you know, you've highlighted the main reasons, of course, in reference to it. You know, it is quite complex for these guys and individuals to get all their accreditations to enable them to do certain things as part of any job. And you then have to have another little psyche a little bit about it. France, we are just about to start August, so don't even think about trying to contact anybody of these people in August, because they've all gone on holiday. For example, it's just a fact of life. And more regularly, again, when you've got them, because they're so short-staffed, you will often find that they're working on probably 6 or 7 projects all at the same time, and will go from place to place for different hours to do certain parts of it. So you will see them going backwards and forwards, and again, that's just commonplace because of how short time they have.
Yeah,
If
yeah,
I
exactly.
can add, Fabien, my own mother, obviously, who lives on her own, has got to have the roof looked at and parts of it just under the eaves painted. She confirmed the contract agreement, so she signed the pricing given by the, let's call him, painter a few weeks ago, and the painter is only coming in April 2025, but she's already paid the deposit for April 2025.
Yeah.
So that is something long planning.
And also, well, just to conclude with this, if you are in a touristic or area of France, or some classified buildings or whatever, you also would be looking at some particular restrictions. For example, in touristic areas where I'm living by the coastline, in summer, basically like July and August, you're not even allowed to do any kind of noisy construction jobs. That's illegal, period. So like the time frame was short already, but then like if you had holidays and stuff. So yeah, so it's not impossible. It's just that you need to be patient and stuff. For small jobs, that might be easier because you may get a handyman to do the job. Like, you know, if there's a leak or something, you know, obviously in case of an emergency. But like when we're talking about the big jobs and things, like, yeah, might be. So, and also there's the language barrier. So yeah. Okay, that's a wrap. Thank you, guys. If you can show some appreciation for the speakers. Thank you, Eric. Thank you, Peter, for your insightful advice.
Thank you all.
And for the very accurate answers. Thank you at the audience. Thank you all for joining today. We'll send a follow-up email to all of the registrants so that you can get the speakers' details. Feel free to reach out after the call. And I wish everyone to have a wonderful day. Looking forward to see you all in France.
Good night to all.
Bye, everybody.
Bye, everyone. Bye. Thanks again. Bye.